Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, April 18th, 2013. Well, a continuation of the trend to the downside today, and the candle it's made a lower high but a higher low, so an inside day in terms of bar charts. So this does raise some serious doubt about continuation of the trend to the downside, and there is doubt because we failed to continue the series of lower highs and lower lows. So that's what makes this candle rather indecisive. It doesn't change the trend, however, so technically the trend is still down. An answer to the solid selling by the buyers today, an answer to the solid selling of the previous day's trading by the buyers, and not much of an answer, unfortunately. Previous day's trading we had a very large black body candle with the sellers closing with strong control but failing to close down through the 130.25 level. And today we've had a small white body, and the small white body suggests that the buyers have made a very small amount of net bullish progress. They did attempt to rally through the 130.79 level of resistance, and I suggested that that would be a potentially strong barrier to this market. And we also had the Tenkan-sen trading in that region, so it was a very, very strong area of resistance. We saw very strong price rejection by the market today up above that level, with the market closing down below the midpoint level. So the sellers have actually taken control of this market at the close of trading. So the sellers have maintained control, not strong control, because they haven't closed down towards the low. It's between the midpoint level and the low. And but the important thing here is that the buyers have really failed to make any impact on this market for today's trading. Now, the 130.25 level has been a very, very strong area of previous resistance in this market, and now for the previous 4 or 5 trading days an area of strong support, and there's been some decent upside price rejection from that level. Moving forward, that is a very, very important level for this market. And if we do see some solid bearish activity down below there for the next day's trading, we could see the market testing down to 129.68, but it certainly doesn't seem as though that's going to happen. To the upside, 130.79 is very strong resistance, and now the bottom of the cloud will come into play in this market. So any potential upside may be strongly limited because of the Ichimoku indicators, and this cloud will offer a very strong and large dynamic level of resistance to this market. In terms of the Fibonacci extension, nothing new here to report from the previous time we looked at this. The market has tested roughly down to the 161.8% level and been rejected from there. The story here is not about the strength of the buyers, however, so that does raise some doubt about the ability of the market to change the trend. It's really there's no strength from the buyers. They lost commitment as they tested up to higher levels, as evidenced by this large shadow. So no clue that we could have a change of trend to the upside at the moment, other than the slight amount of rejection that we saw once again from near the 161.8% level. And a similar story with the Fibonacci retracement. Once again, for the second day in a row, we've seen rejection from near or just below the 100% level of 130.20. So possibility of change of trend that will be severely limited by close buy resistance, but certainly we're not seeing any strength from the buyers. In terms of Ichimoku, a bearish market in the long-term time frame by trading down below the cloud, so a bearish bias, and the bias here is that if we do see the breakouts to the downside below important support, then we could see the market trading lower, and substantially lower if we can trade through the 129.68 level. The market is, however, trading up above the Kijun-sen, so we have a bullish market in the medium-term time frame, but the market is attempting to retrace back towards that flat Kijun-sen, and that is a very strong possibility for tomorrow's trading as well. But 130.25 will be a crucial barrier to that happening, and the market is trading down below the Tenkan-sen for the second period in a row, so a bearish market in the short-term time frame, and that suggests that there is some support to the market trading lower. But the story here really is about the strong barriers that the market has close by. Strong resistance at 130.79, strong support down at 130.25. Really not a market that is a good market to trade at the moment. Let's wait for some clear direction in this market. The fact that the market has tested up to the cloud and been rejected from there and is trading down below the cloud suggests that this market may revisit lower levels. But if we do see strong bearish activity down below 129.68, we could quickly see the market trading down to 128.57 and then even down to 127.49.